from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, a big departure at Facebook. 13-year veteran Mike Schroepfer plans to step down from his role as Chief Technology Officer next year. This as the social network faces intense criticism that the technology it's developed to moderate harmful content doesn't work as well as promised. Plus, Uber's fight to get more drivers on the road, reduce wait times, and prices for riders. This as the company pushes towards profitability. My conversation with Uber CEO Dara KHOSROWSHAHI later this hour. And President Biden called on other nations to help vastly expand production of COVID vaccines and treatments to end the pandemic. He said the U.S. will buy an additional 500 million doses of Pfizer's vaccine to donate to other countries. We'll bring you all the details. We'll get to all of that in a moment, but first, Federal Reserve Chair Jerome Powell said the central bank could begin scaling back asset purchases as soon as November and complete the process by mid-2022, after officials revealed a growing inclination to raise interest rates next year.
We continue to expect that it will be appropriate to maintain the current 0 to 1/4% target range for the federal funds rate until labor market conditions have reached levels consistent with the committee's assessment of maximum employment, and inflation has risen to 2% and is on track to moderately exceed 2% for some time.
Let's get a look at how markets reacted with Bloomberg's Kriti Gupta. Kriti, walk us through the day.
Well, Emily, on the surface, it seems like a pretty hawkish statement to make, but here's the thing. This is why you're seeing green on the screen today. It wasn't as hawkish as people were thinking. A lot of investors really expecting that November start date. We'll get to that in a second, but I really want to point out we're seeing green on the screen after 2 negative days, and of course, Monday was that major sell-off. So in addition to the Fed, there is some technical elements here, really just that bounce back coming back to the forefront. So what comes next? We're dealing with September seasonality. October is also known as being traditionally kind of a month that a lot of superstitious, I should say, investors really suspect for stocks dropping. I want to show you a terminal chart of what sentiment is doing right now, because really taking a dive when we're talking about the bulls and the bears. And Emily, we've talked about a lot of the bulls coming out, buying every dip. It's really what's pushed the S&P 500 to record after record. That is until now. You are seeing, like I said, this dip where the bear sentiment is actually coming to the forefront. Really tells you here that maybe those dip buyers, they might not be showing up this month. So let's bring it back to the Fed, because at the end of the day, that's the big story. In your intro, you talked about November being the potential start date. Chairman Powell saying it could come as soon as November, ending mid-2022. Like I said, something that a lot of investors were really expecting, November really being that start date. But here's the thing, Emily, he's talking about a 6-month time frame and talking about a gradual tapering. That is half the time the last round of tapering took after the global financial crisis. So whether that's actually a market positive or a market negative in terms of reversing some of that emergency stimulus, that's something we're going to have to watch. Lots going on the macro front. Ed, what is going on under the hood?
Straight to Bitcoin. We've been trading between 43,000 and 44,000 US dollars. But as you pointed out, we had 2 down days at the beginning of this week, seeing a sell-off in risk assets, and Bitcoin followed suit. You can see investors clearly rethinking Bitcoin at the start of this week. But as we went through Wednesday's session, we saw gains in the cryptocurrency as well. Obviously, some of that around the Fed and that somewhat hawkish sentiment that we got. Some breaking news after the bell, of course. Facebook's Chief Technology Officer, Mike Schroepfer, is departing from the company after 13 years. He was a big name behind the AI initiative. You can see shares a little soft. They've been down around 0.7% after hours, pairing some of those losses. But the bigger concern for investors was during regular trades. Let's bring up the numbers during Wednesday's session. You saw Facebook dropping by the most since July after a blog post basically saying that those iOS changes in terms of ad tracking will have a pretty material impact on the company's third quarter results. You can see what investors thought about it, down 4%, at one point down the most since November of last year. The only kind of tech stock that did worse on Wednesday was Peloton, down 6%. It's not had a good month of September. And in terms of some of the upside, the green, the movers to the upside on Wednesday, we're seeing Chinese ADIs, American Depository Receipts, doing well. Of course, there was this narrative at the start of the week around China's regulatory clampdown on internet companies. But you have names like JD.com, Pinduoduo doing very well on Wednesday. Emily.
All right, Ed, thanks so much for that roundup. I want to get more on those Facebook headlines now. Facebook CTO Mike Schrepfer has announced he will be stepping down sometime next year, marking the most significant executive departure at the social network in years. This after the company also announced that changes to Apple's ad policies could have a negative impact on their business and their revenue. Kurt Wagner covers Facebook for Bloomberg News with us now. Kurt, let's start on this Schrepfer news. They call him Shrep. I should say, what do we know?
Well, we know that it's not going to be a quick departure. He did announce internally that he's going to leave sometime next year. They have actually created a new position, kind of a senior fellow position that he's going to take at the company. I'm told it's part-time. He's essentially going to be, what I gather, is advising, staying on a little bit, helping with some of the technical stuff that he already oversees. But really, this is a huge deal because not only has he been there a long time, he's well respected internally, he oversees so many important elements of Facebook, including AR, VR, augmented reality, artificial intelligence, the hardware division. So all of this different technical stuff that really drives a lot of what Facebook wants to do in the future is under his purview. And so the fact that he's leaving, certainly that creates an issue.
Andrew Bosworth, who's been at Facebook almost as long as Mark Zuckerberg, will replace him as CTO. But this does come after a number of other high-profile departures. Carolyn Everson, who was running global ads. Fiji Simo leaving. She was running Facebook product. Both of them are now at Instacart. This at a time when Facebook is under a lot of pressure about how well its technology actually works to moderate harmful content. Do you think this has anything to do with that, Shrep's departure?
So what you're talking about is the AI here, and what Facebook uses is they use that AI to essentially automatically search user posts for violating content, right? Nudity, hate speech, terrorist propaganda. And this is the type of stuff that Schrep and his team were responsible for, that AI team. Now, it has been a huge thorn in Facebook's side. It's been a criticism of the company that this technology is not where it needs to be. I don't believe that he's being pushed out in any way because of that. He's been there such a long time, and these have been issues for the company for a long time now. It is possible, though, that at a certain point, this type of stuff just wears on you, right? It's tough to continually be pushing a rock uphill like the technology here. And there was a New York Times profile of Schrep a few years ago where he cried multiple times during interviews with reporters because these are such big problems. And so I do think that it could wear on him. I don't necessarily think he's being pushed out as a result of any of their success or lack of success in the AI front.
All right, Bloomberg's Kurt Wagner, thank you so much for your reporting on this. I want to get more on this Facebook news from Mark Mahaney, Evercore ISI head of Internet Research. Lots of Facebook developments, Mark, to talk about, but I do want to start on this Schrepfer news. You know, this is a pretty big deal. He's been there a really long time. He's well respected. His desk is right next to Mark Zuckerberg and Sheryl Sandberg's. Is this a bad sign?
Not necessarily. This reminds me, though, of the Chris Cox resignation several years ago, and then he eventually came back to the company. So this isn't the first time we've had kind of one of the original gang of, I don't know how many, what the gang number was back then, but one of the original people with the firm stepped down. And maybe that's just the natural, and you already mentioned a few of the other people who left. So I don't think it's necessarily a negative tell. Maybe it's just the natural evolution of people being there for, a dozen years is a long time with any company. But that's how I'm going to interpret it, as somebody who kind of had his time, was ready for a new challenge, maybe exhausted, looking for something else to do. I don't view it as a negative for the company until we find out something else.
All right. Meantime, Facebook today warning that these Apple ad tracking issues could have an impact on revenue. Just how big an impact are you forecasting?
Yeah, so Emily, this was an odd one because there was a blog put up by one of the marketing managers essentially reiterating what they had said on the earnings call, which is that these Apple iOS changes are likely to make targeting campaigns, the targeting part of running campaigns, a little bit more challenging. We've thought for a while that this is kind of GDPR version 2. We're going to have 1 to 2 points clip to the year-over-year growth rates for 1 or 2 quarters. So there's an impact that's relatively modest in duration and in quantity. The fact that they put out a blog today was, I thought, was a bit strange. Now, what's happened is 6 months ago, the market was, I thought, over fixated on the IDFA Apple risks. And then in the last month or two, it just seems like the market's become very complacent. And maybe this is Facebook's way of just reminding people, hey, we called this out before. Don't forget about it. Don't be expecting a lot of upside because Apple is going to have an impact. And by the way, we heard that from one company last night, Stitch Fix. They came in light in terms of their new subscribers, and in part they blamed it on the Apple changes. So there is a real impact in the market. We think it's modest and manageable, but that's our working assumption. And I don't think today's blog changes that.
Well, we're definitely seeing an impact from investors after hours. Meantime, you are out with a new report called Social Butterflies, looking at the broader social media landscape. Talk to us about the most significant findings.
Yeah, so we've been doing this for, I've done this for semi-annually now for 5 years. You know, just every 6 months, we try to see what people think about social media and the different assets that they find interesting and where things are waxing and where they're waning. So the wax is, I think that's going up, is TikTok, not surprisingly, but just the level of enthusiasm, the amount of time people spend there. It's really just rocketed up the chart. It still has lower usage than Snapchat, Pinterest, Twitter, but that's just a matter of time, it seems like in our books. And then on the negative side, Facebook had some of its weakest, core Facebook, not Instagram, had some of its weakest satisfaction scores. You know, we ask people how satisfied they are with the service, and, you know, we rank them across, you know, most very satisfied to not at all satisfied. And the skew became negative, you know, it was more negative than we'd ever seen. So there is a challenge here for Facebook, and it may well be a result of all of the negative press that Facebook's gotten. Emily, in my, I don't know, 10 years or 25 years, frankly, of covering the internet stocks, I'm pressed to think of a time when I've seen a major internet company receive as consistent negative PR as the company has been experiencing in the last couple of months. And that may be finally reflecting in satisfaction. That and the fact that you're close to mature levels for Facebook. I mean, this is just, they've got so many users in North America. It's 80% of the population, frankly. So it's kind of hard to get any more early enthusiasts. If you're an enthusiast, you're not early now. You'd be extremely late.
Are your numbers, Mark, accounting for Instagram as well? Are users dissatisfied with Instagram too?
No, we look at that separately, Emily. And Instagram continues to be one of the most popular of all the social media assets out there. And there's, you know, we're talking about Snap and Twitter and Pinterest and TikTok and Instagram. Sometimes we bring in YouTube too. Instagram seems to consistently be one of the most, its customer base seems to be amongst the most satisfied. I do want to point out one thing, though, because I started off by talking about the rise of TikTok. One thing we tried to suss out in our report, well, who's at risk? We haven't seen it yet in the user growth and the engagement growth for any of the assets. But the one I would kind of warn about is Instagram. I mean, it seems like the use case, how people, why people, and the way they interact with TikTok is probably most consistent, most similar to how people interact with Instagram. So that's the one. We haven't seen the risk yet, and I think that that kind of forced, in a way, Instagram to roll out Instagram Reels, which is showing pretty good traction in our survey. But that's the one that I think has the biggest bullseye. Instagram is the biggest bullseye in its back because of TikTok.
Interesting. Meantime, you referred to the negative publicity that Facebook is getting lately, and let's be honest, they haven't got a lot of fond media attention now for years, but it's really reached a climax with this Wall Street Journal series of investigations. You know, some of the headlines there that Facebook knew Instagram was toxic to teenagers and didn't do anything about it. Do you think at this point that this kind of media coverage, this negative coverage, is going to finally impact the stock price?
I thought you were going to go a different way. No, I don't think so, because yes, if it impacts the fundamentals. We did see, by the way, this have a small impact on Facebook's revenue growth a year ago. So that would be the case. The thing that people sometimes miss about Facebook is not really large brand advertisers. This is not really Procter & Gamble. It's not really Coca-Cola. It's 10 million small businesses. And one of the biggest so whats of the COVID crisis, fortunately or unfortunately, is that you had this huge surge in new business formation. And new businesses today are trying to build out awareness for themselves, whether they're online commerce companies or service companies or local pizzerias, whatever it is. You know where they're building out their presence today? It's on Facebook and on Google. So these small businesses that are trying to build out their claims, stake their claims, grow businesses, get foot traffic in, whatever, web traffic in, you know, app traffic in, they're still going to rely on Facebook and Google unless those platforms really underperform for them. And so far, they've been performing extremely well. That's why dollars are still going there. I think the press reports change that, the way that small businesses will think about Facebook or Google.
All right, well, fascinating report you have out today. Social Butterflies. Mark Mahaney, Evercore ISI, Head of Internet Research. Always, Mark, appreciate you joining us. Meantime, Uber CEO Dara Khosrowshahi says the company will defend its drivers against lawsuits nationwide if other states pass an abortion ban like the law recently passed in Texas. Both Uber and its rival Lyft have said they'll cover legal expenses for drivers facing lawsuits for helping women access abortions. Here's what Khosrowshahi had to say about taking this a step further.
We don't think that drivers should be sued by private clients. We think that's unprecedented, it's wrong, and if it happens in another state, we're going to stand behind our drivers just like we did in Texas.
With Uber CEO Dara Khosrowshahi coming up next. This is Bloomberg. Chang in San Francisco. In developing news, President Biden has appointed a critic of cryptocurrencies and big banks to run a Wall Street watchdog. Saul Omarova will be tapped to run the Office of Comptroller of the currency as soon as this week. She's a law professor who has said she wants to end banking as we know it. Meantime, Uber shares taking quite the ride after the company boosted its third quarter outlook, saying it may turn a profit this quarter. The stock up almost 13% in the last 2 days. I caught up with CEO Dara Khosrowshahi earlier to talk about how the company is managing driver supply, price surges for riders, and food delivery in a rapidly evolving market. Take a listen.
There's a revolution happening in terms of delivery of all things to your home. It started with food, but it's going to continue with grocery and pharmacy or your iPhone, etc. And just in 4 years, our Uber Eats business has gone from a $2.5 billion run rate to a $52 billion run rate. And we think there's so much more to go. Users want what they want at their home right now. You know, it used to be that next day delivery was awesome. Now it's all about next hour delivery. And what we're doing is empowering any local merchant to essentially get anything that you want locally to your home within hours. And clearly eaters and users love it. And we think it's a trend that's going to continue over the next 5 to 10 years.
Now, you just revealed Uber could post its first profit this quarter. What are the levers that you can and will pull to determine whether that happens this quarter or not?
Well, I think what's happening now is our marketplace is becoming much more balanced. If you looked in Q2, the demand for moving around and getting things to your home essentially was increasing at a much faster rate than supply. We had to invest very aggressively to bring more drivers onto the platform, more couriers onto the platform. And you're seeing the benefits of that in Q3, where the marketplace is much more balanced. Our margins are coming back to normal. Our mobility margins actually are going to be equal to pre-pandemic levels, even at lower volume, because of the moves that we've made in terms of automation. And our Uber Eats business is both growing the top line, but now is getting to EBITDA profitability levels as well by the end of the year. So really now things are working out quite well for us, where we can grow the top line, but we can do so profitably on a sustainable basis for some period to come.
Still, you're continuing to work on driver supply around the world. There are price surges that we as riders are certainly feeling. You've said that price surge will ease up by the end of the year. Without that, do you see long-term profitability? Will you hit that milestone quarter after quarter?
Well, absolutely, we do. And we're seeing the prices essentially stabilize now. Our surge levels are coming down. ETAs now are the best that they've been since the beginning of the year. And conversion rates, as far as the percentage of users opening the app and getting the service that they want, whether it's food delivered to their home or whether it's they're going somewhere, all of these metrics are moving in the right direction. So we think we can be profitable, but we can be profitable delivering an amazing experience to riders and eaters, and also really strong earnings level to our earners.
I want to zoom into the UK in particular, where you are seeing longer wait times. Drivers are going to other apps. They're moving on to other sources of income. When do you see a better balance between supply and demand?
Well, I think what we're seeing in the UK is that demand right now in the UK is at 20 to 40% higher than pre-pandemic levels. I mean, the UK is really opening up, and it's amazing to see the number of drivers that we have on our platform now is as high as it was pre-pandemic, but it hasn't caught up to the growth in supply. So we're going out there in the UK now, and we are looking to bring on 20,000 more drivers onto the platform. The earnings opportunities are better than they ever have been. And as far as the service goes, you know, over 60% of the time you're getting your ride within 5 minutes. 90+% of the time you're getting your ride within 10 minutes. We want it to be faster, but the service is now working the way that we want it to, and there's a ton of earnings opportunities, and hopefully we'll get more drivers onto the platform to catch up to the incredible demand that we're seeing.
You can catch the full interview at Bloomberg.com. Uber CEO Dara KHOSROWSHAHI. Coming up, the battle over FORTNITE continues. We'll bring you details of the latest salvo in the ongoing dispute between Apple and Epic Games. Meantime, Disney erased some of Tuesday's losses following CEO Bob Chapek's comments about slower than expected subscriber growth for Disney+. Concerns remain about movie and TV production delays due to the Delta surge, the slow rollout of a new streaming product in Latin America, and the expiration of subscriber offers in India, also weighing on investor minds. This is Bloomberg. Apple has told Epic Games that it plans to keep Fortnite off the App Store until all appeals are exhausted. Epic sued Apple after the iPhone maker removed the game when the developer came up with a workaround that circumvented Apple's commission on purchases. A California judge sided mostly with Apple in the case, although the company was told it should allow app developers to point users to outside payment systems. Epic CEO Tim Sweeney has criticized Apple's latest move, warning the appeal process could take 5 years. Meantime, Apple will give its store employees a one-time bonus of up to $1,000. The rare perk was presented to retail staff as a recognition of the difficulty working through the pandemic. Like a lot of other companies in the U.S., Apple is facing a tight market for labor as employers struggle to attract enough staff. And Microsoft has introduced its revamped line of Surface devices, this including an update to its popular 2-in-1 laptop model, signaling the company's push to be a bigger force in computer hardware. Also revealed the new Duo foldable phone that comes with 5G and a dedicated rear camera system. Unlike Samsung's foldable phone, this device has 2 distinct screens that open, opposed to 1 consistent display. And coming up, the global race to get the world vaccinated. We'll be joined by Alexander Hardy, the CEO of the biotech company Genentech, to talk about vaccines and treatments in the fight against COVID-19. That is next. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Let's get back to the markets with Bloomberg's Ed Ludlow, tracking a big IPO in the software space. Ed, tell us all about it.
Yeah, this is FreshWorks. By the time the market had closed, it jumped 32% from its offer price. What's so interesting about this company, it was founded in India, later moved to Silicon Valley, but basically becomes the biggest Indian software company to list in the United States. And in terms of what they do, well, there's a very easy side-by-side comparison. Software as a service. They're basically gunning for the market that Salesforce dominates so well. And what's so interesting is the company's CEO in an interview with Bloomberg was speaking about Salesforce. He was saying that Mark Benioff is an amazing leader and they have great respect for Salesforce if we bring up the next board, and basically saying that they want to emulate the success that Salesforce has had. But if we dig deep into the financials of this company, Freshworks, they've got an awful long way to go. Really modest revenue for the time being, but it did jump 40% in 2020. So they are a growing company in terms of the company's fundamentals, a company to watch going forward. They've already got 52,000 customers. And what's interesting, they're not yet profitable, but that net loss is shrinking. A net loss in the first half of this year of around $10 million compared to $57 million in the same period last year. So it's interesting to see these new kind of software-focused companies hit the market, and we'll track them going forward. Emily.
All right, Ed, thanks much. Meantime, President Biden calling on other nations to help vastly expand the production of COVID vaccines and treatments in order to end the pandemic. The president hosting a virtual summit calling the pandemic, quote, a global tragedy.
We need other high-income countries to deliver on their own ambitious vaccine donations and pledges. That's why today we're launching the EU-US Vaccine Partnership to work more closely together and with our partners and expanding global vaccinations.
President Biden said the U.S. will buy another 500 million doses of Pfizer-BioNTech's vaccine to donate abroad, pushing the total U.S. donation pledge above 1.1 billion doses. I want to bring in Genentech CEO Alexander Hardy for more on the vaccine push. Alexander, what do you think of this announcement from President Biden at this stage in the pandemic?
Well, Emily, Genentech is focused on therapeutics, and our sister company is focused on diagnostics. But I can speak on the vaccine donations and welcome them wholeheartedly. This is, I think, a really important move by the U.S. government. We're going to get through this globally, and I think international partnerships are really critical. I would say that vaccines are important. It's also going to take testing and therapeutics for us to globally navigate, and as a country, to the end of this pandemic.
Will there be an end? I mean, some days it seems almost impossible.
Well, I think we'll get out of the pandemic phase. Clearly, this is taking longer than any of us expected it to take, and then we'll face this pathogen being an endemic pathogen. One we'll deal with on an ongoing basis. And that's informing our research right now. We have 2 drugs, therapeutics, approved as therapeutics with emergency use authorizations. We're also working on an oral treatment. Our hope is that we'll have a drug which can be used at the first signs and symptoms of COVID-19. And this is when this will then become a disease that we're dealing on an everyday basis, hopefully without anywhere near the mortality and morbidity that we're seeing at the moment.
Does that mean we'll never really get to herd immunity? COVID will never be gone?
I think, we have experience with other pathogens like this, and they will continue to evolve, and we'll continue to develop approaches to deal with them. So again, I don't want to be a scaremonger here. I think we'll figure out how to manage this disease as a society, and clearly vaccinations, testing, and therapeutics are going to be really important to this.
Genentech is obviously one of the most storied biotech companies here in the U.S. Talk to us about how you've been involved in the fight against COVID-19.
Yes, we were absolutely focused from day one on COVID. Initially, you look at existing drugs. Could they possibly work against COVID? And that was very much of our effort. We had multiple different drugs. We immediately moved into clinical studies. We were actually mobilized clinical studies the fastest that we ever have done. And out of that, we identified a drug, a medicine, which did receive emergency use authorization and is one of the mainstays of treatment right now. We also entered into a number of partnerships. And one of the partnerships we entered into was with Regeneron to manufacture, develop, and distribute globally their monoclonal antibody in partnership with them. And that's also a very, very important therapeutic option for patients who are diagnosed with COVID-19.
Meantime, there are other diseases that are still a concern, though, of course, they haven't gotten the attention of the last 18 months. Genentech works on medicine for multiple diseases. Which diseases do you think we'll see big breakthroughs in the near future?
Well, I think this is an enormously exciting time for science. Emily, you're very focused on the tech industry, and I think the merging of biology and data and advanced analytics, it's just enormously exciting. As a company, we have a deep knowledge of biology and drug development, but we see now the possibilities around data and analytics. And this is going to open up opportunities in multiple different disease areas. The first, where we can already see the benefits, is clearly in oncology, and we're very, very deeply focused in oncology. This is going to help us discover new medicines, develop them more effectively and efficiently, get them to patients quicker, and then make sure that the drugs are used in specifically the patients that will benefit from the treatment. This is a really, really exciting time, and I think the benefits are going to be across multiple different therapy areas.
Will we ever have a cure for cancer, or will it be something that we can just better treat?
I think, we can certainly look forward to a time where cancer is much more of a chronic disease without the levels of mortality and morbidity. We are making tremendous progress. I don't want to predict that we can cure cancer. We are making progress in many, many of the most significant cancer types. And again, I think that the biology and the technology and our know-how and multiple modalities, treatment platforms, I think the future is more exciting than the past for oncology.
Meantime, many patients here, around the world and even here in the United States can't afford the medicines that they need. Do you think that the status quo is working? And if not, what needs to change?
Well, Emily, I'm glad you bring that up. The status quo isn't working for patients in the United States. We believe firmly that we have to make progress on the topic of affordability of drugs for patients. This is obviously a major policy topic right now. We are believers that there are solutions that can significantly reduce the costs of drugs for patients, but at the same time, sustain innovation. We've been talking about the potential of the science, the potential to make so much progress across so many different diseases. And we can absolutely come up with solutions that allow innovation, but also reduce costs for patients.
All right, well, glad to hear about all of the important and exciting things you're working on. Genentech CEO Alexander Hardy, thanks for stopping by. Coming up, California's housing crisis, how it played a part in Governor Gavin Newsom's recall election, and what action he's taking now. We'll discuss. This is Bloomberg. The housing crisis has been a hot topic in California for a long time and played a big role in the campaign to recall Governor Gavin Newsom. As we all know, Newsom survived last week's recall vote and has since signed some of the biggest housing bills in years to try to address this issue. We are joined now by Bloomberg City Lab reporter Sarah Holder for more. So Sarah, I think the conventional wisdom is that how Newsom handled the pandemic really drove that recall effort. But how much did homelessness, in fact, play a part?
It's no secret that housing affordability, rising prices, and homelessness are big issues on California residents and California voters' minds. Those issues also predated Newsom's run as governor and are issues that he has pledged to tackle. He came into office pledging to build 3.5 million homes. He hasn't reached that goal, and even he admits that was a really ambitious goal. There's still 150,000 homeless residents on our streets, but even housing advocates and those who really point to these issues as big sort of acknowledge that it was the COVID, the lockdowns, and business owners who were driving the brunt of the recall. But many of those same people say that by re-electing or giving Governor Newsom the mandate to continue to lead, Californians have avoided some of the more worst-case scenarios for the future of housing affordability and housing policy in the state.
The tech industry has certainly played a role in the housing issues and affordability issues in the Bay Area, taking up affordable housing, driving prices up. I wonder, what is the state of the homeless crisis now that we are mid-pandemic? A lot of folks have left the city. What are the main problems that remain?
Yeah, I mean, I think one of the broadest questions that housing advocates have are how to both spur housing construction and spur affordable housing construction, and spend money on creating permanent solutions for getting unhoused residents into homes. You know, some of Governor Newsom's biggest challengers from the right, Larry Elder, even Kevin Falconer, really emphasized homeless shelters and clearing tent encampments, and that's something that some voters would have liked to see. But I think that Newsom has shown that he is more focused on creating permanent supportive housing. He's investing $10 million in addressing the homelessness crisis through creating pathways to rental housing and other ways to get people off the streets and more into permanent solutions instead of more shelters. But that's been a complicated proposition, and I think many people would tell you that it hasn't resulted in major change over the past few years.
So talk to us about the legislation that he signed and what it means.
So on Thursday, almost immediately after Californians voted an overwhelming no on the recall, Newsom signed SB 8, SB 9, and SB 10. SB 8 just extends some abilities for cities and the state to build more housing in a more streamlined way. And then SB 9 and SB 10 really tackle single-family zoning across the state. So another no secret is that California is two-thirds of the state is zoned for single-family homes, which means that it's impossible and illegal to build more homes on those lots. What SB 9 and SB 10 would do is make it legal to build more homes and to densify the state. So they were controversial bills, and they were a long time coming in California. SB 9 allows property owners to build 2 houses on a single-family zoned lot and able to subdivide it into 2. And therefore build 4 homes on a single-family lot. And then SB 10 would make it easier for cities to upzone up to 10-unit multifamily housing on lots that are near jobs, near transit.
All right, well, initiatives that we will continue to follow. Our Bloomberg City Lab reporter, Sarah Holder, thanks so much. Okay, coming up, we're going to be joined by the co-founder and CEO of Redwood Materials and Tesla alum, J.B. Straubel, whose company just announced a partnership with Ford. We're going to talk about how batteries are being recycled to help power Ford's fleet of electric cars next. This is Bloomberg. From the wildfires burning across the western U.S. to hurricanes as far north as Canada, it is no doubt weather is seeing some extreme and unexpected shifts. Bloomberg's Akshat Rathi explains why anxiety around climate change is growing.
Climate anxiety is the first stage. Climate whiplash comes next. It's now undeniable that climate change is here. The main culprit is the world's addiction to burning fossil fuels. The harm unleashed is no longer in small pockets of the world. This summer, 1 in 3 US residents lived in a county that was hit by climate fuel disasters like droughts, floods, wildfires, heat waves, or hurricanes. All this is happening when the world has warmed 1.1 degrees Celsius, and as the planet enters its hottest period in the last 125,000 years. Worse, despite decades of growing alarm from scientists, politicians and corporations are not doing enough. Emissions are high and show little sign of falling quickly enough. Holding those 2 facts in your head can create overwhelming fear for the future of the planet. That may be worsened by the lack of agency any individual has to alter the course. However, if you've been following climate news more closely, you'll experience something closer to a whiplash. That's because the solutions to cut emissions are becoming more viable by the day. The price of solar and wind power has fallen faster than most estimated. That trajectory is repeated with batteries and electric cars. Carbon-free hydrogen may follow suit. At the same time, some $35 trillion worth of assets are labeled green. Even though greenwashing is rife, the market is signaling its desire to help slow global warming. Climate diplomacy remains difficult, but the past decade has shown a lot of progress. After island nations fought hard, the Paris Agreement included the goal to try to keep global warming below 1.5 degrees Celsius. 9 of the world's 10 largest economies have now committed to reaching net zero within decades to keep the 1.5 degrees goal alive. At the same time, public concern for climate change has risen and remains high. It now often ranks alongside health and economy as the top issue, which forces world leaders to keep at the task. So, when I'm asked what makes you hopeful, the best answer is, I don't have hope, I have certainty. We know exactly what's causing climate change, we can avoid the worst and build a better world in the process. Because some amount of warming is baked into the system, we can be certain that climate impacts will get worse. At the same time, solutions will become cheaper and scale faster. That means the whiplash is about to get stronger too. This is Net Zero. I am Akshat Rathi. For more like this, follow us on your favorite platforms.
Sticking with climate, Ford Motor has announced they are taking the next step in creating truly renewable cars. The automaker has announced a partnership with Nevada-based Redwood Materials, the startup founded by Tesla alum J.B. Straubel, to reuse key ingredients in the lithium-ion batteries that will power Ford's fleet of electric cars. For more on the announcement, I want to bring in Redwood Materials co-founder and CEO J.B. Straubel, who is also the co-founder and former CTO of Tesla. J.B., great to have you back with us. Talk to us about what this partnership with Ford means for their EV production.
Well, great to be here. And yeah, this is an exciting announcement for us and for Ford as well, I think. Redwood was founded, to create the circular supply chain and create the technologies and processes in order to recycle batteries, but also to remanufacture them, keeping the materials, in country here in North America where they were initially purchased, and then finding ways to reintroduce those directly into the battery supply chain. So for Ford, we're aiming to do exactly that, and this really supports the same mission we've started the company with. For them, it's a way to both reduce the environmental impact of the batteries that they will make on day one, and the vehicles as well. But it also assures a good solution for end of life when those vehicles eventually need to come off the road. And on top of all that, we can find ways, by recycling them, recovering the materials, to reduce the need for new mining or reduce the need somewhat for imported critical raw materials.
So does that mean we could eliminate our reliance on lithium mined from countries like Africa and China, where a lot of it comes from today?
Well, in the long-term, future, I'm confident we will be able to eventually, eliminate the reliance on those mined materials. Batteries are amazing in that they don't consume the materials that are inside of them. They sort of carry them around for their lifetime, and then they can be recovered almost entirely and essentially infinitely recycled. So, we need those raw materials in the period where we're building up the fleet the first time and expanding production, which will still be happening for quite a few years. But once the fleet starts to stabilize, we can reach a period where it's really self-sufficient.
Will this also make EV batteries cheaper and ultimately EV cars?
It's a great point. And one of the big reasons, in addition to sustainability, to focus on recycling and remanufacturing materials is cost. Even today, at a relatively small scale, it is profitable and lower cost to recover and recycle these materials from an old battery than it is to mine them, refine them, and transport them around the world as brand new materials. So each year that goes by, as we have higher and higher recycled material content in the batteries and in the cars that use them, and we will be able to, incrementally drive down the cost of those materials. And I'm pretty optimistic that can be a very big factor in the years and decades to come on helping expand electrification and hit some of these, really ambitious and exciting targets these companies have.
You recently announced you want to bring $25 billion of the battery supply chain from Asia to the US with a new mega battery factory. What would this mean for the future of battery manufacturing and, of course, the price here in the United States?
Well, it's interesting that, you know, the United States and North America generally does not have a supply chain, you know, today for the raw materials and all the components that go into batteries. You know, we're beginning to industrialize battery assembly and beginning to, of course, ramp electric vehicle assembly from many different OEMs. But that supply chain upstream of that doesn't exist here today. And, you know, that's what we announced last week was, I think a pretty rapid and focused effort to industrialize and start making those raw materials, those components, anode copper foil and, you know, cathode active material being the two strategic things we're focusing on first, building those components here in North America so that, you know, we can begin to diversify our really total reliance on Asia for those materials.
Fascinating. JB Straubel, really appreciate you giving us an update on your battery and recycling efforts. Such a fascinating industry. Thank you so much for joining us, CEO of Redwood Materials. And as we head to break, we've got some breaking news. The FDA is set to authorize the third Pfizer shot, again, a booster shot for ages 65 and over and high-risk people. We are tracking that headline. Stay tuned to Bloomberg Television for more information. And that does it for this edition of Bloomberg Technology. Tune in tomorrow. We're going to be joined by Stitch Fix CEO Elizabeth Spaulding and the CEO of Expedia, Peter Kern. This is Bloomberg.